Good morning, everyone. It is Sunday morning where I am, so it's if it's afternoon or evening where you are, a good afternoon or evening. We've got a lot of material to go through today, so it's going to be interesting to see whether I can get through it all in an hour. I think probably not, but we'll see, because I'd like to take a number of questions as well. We have got not a lot of people registered, actually. We only have a few people in the room so far, so we may get more for the people that are sort of earlier on a Sunday. We may not get them right away. If somebody could let me know in your chat box there that you can hear me okay, that would be okay. Hear and see me. And if everything is all right that way, we're going to get started fairly quickly here, whether we have the full contingent with us or not. We've got more people jumping in as we get rolling here. So yeah, if somebody could just let me know that I can hear and see you. There's Harvey. Thank you, Harvey. And I'm going to shut down my other computer since I know that we're in pretty good shape here. All right, so what I'm going to do today is talk an awful lot about history. I'm going to start off with giving you the bigger picture, but this is really history repeating itself for anybody that is not used to the website or is not used to cycles. So I'm really going to start from an introductory perspective and take you through how I even began getting into cycles and trading so that you understand how this all fits together. And by the end of it, we'll get into some of the more nitty-gritty stuff. I've got about 5 sections of this, and I'm going to take questions more at that point than in between. And I'm hoping to answer questions that are more of a general nature. If we get too far down a little rabbit hole, which we can do pretty quickly with this stuff, or if it is too specific to an individual, then I'm probably not going to go there. But you can always email me, and I will make sure to give you my email address. Actually, I'll give you my email address now. You can get it on the site, but it's peter@worldcyclesinstitute.com. So if there's anything that you don't get to ask or is making you crazy or that I don't answer, there is a way to get that information. So we'll get into this now. There is a fabulous quote here that I like. So those that do not remember the past are condemned to repeat it. And my goodness, that is so true. I'm running into it in the area that I'm in. It just seems to me that younger people don't read history, and you could even say that about older people, but particularly right now, I'm finding that people think in Calgary, for example, where we've been hit really, really hard. I'm in Canada. In Calgary, which is the oil and gas capital of Canada, of course, commodities have gone down. They're always the first thing to tank in a depression, and everybody thinks it's just a little blip and everything is going to get better. I think they're getting a little more concerned now. I mean, my goodness, it's been 8 years since 2008 when we had our first drop, which is a part of this one. So I'm going to get into that. Yeah, you're not going to see me. I'm just going to stick to slides. I've got a lot of slides that are going to take us through this, a lot of visuals and things. So it's jam-packed full of information. So I'm going to start off with a little bit of background. Then I'm going to get into this second part here, which is climate and cycles, the big picture. And I'm going to start off with climate and then get into cycles through that route. Then I'm going to take us through the markets, the long term, going back 200 years, and I will be talking about a 500-year going back that far, but long term. And then I'm going to drift into today and where we are right now. And I want to get into what I'm expecting after we have the top, which I think is going to be in November. And because that's what everything is telling me. So we'll get to that. And then I want to talk about deflation, which is going to be the new environment, and how gold works into that, and where those two things are going, and how you can work with deflation to stay both safe and actually make some money. Because this is, if you go back to 1929, 1930, people that knew what they were doing and wanted to speculate on the market created their fortunes during this time. So it is, I say that it is probably the largest opportunity or biggest opportunity in your lifetime to change your financial outlook. And even if you do not speculate, if you understand what deflation is and how to work with it, then you can be just fine during this period, which is a major reset of the economy. Then I want to touch on the monetary system, which is the real issue. And I think this is going to be a financial revolution more than anything, because I think our monetary system, which we have had for centuries, really, has got to change, because we keep creating these bubbles, and we keep going off and on gold and trying to figure out another system. But the problem is the money lenders that go back to the time of Jesus Christ at the 100 AD time. And so this just keeps coming back. They eventually get control again, and then we have a revolution where the people take charge again. Then I want to talk about the upcoming scenario generally, and some preparations to get you thinking about the things that you can do. So it's interesting. I got interested in cycles. I really didn't know that much about them before about 2008, say, and I had been trading for a couple of years, very much into Elliot wave at that point. And I was looking at an article. I don't exactly know why I started to do this, but there was an outbreak of tornadoes in 1974. And of course, this was in 2008, and people are starting to talk about climate. And I thought, gee, that's interesting. 1974, there was also a downturn in the markets, and you can see that here. So that was, to an Elliott waiver, which I was at that time, was the previous fourth wave. And so I'm going to get into that a little bit later, but that makes an awful lot of sense in terms of it getting colder outside. In fact, in those days, there were people that were talking about a mini ice age. How things have changed. It's just that every time we get at the end of a pendulum swing, if it's in weather and temperature, humans tend to go wild and think that, okay, it's going to keep going in this direction. And of course, it never does. It swings back and forth, but we go to extremes. So I started to get into, okay, what does that mean? Because I knew that the 1930s, in 1929, it had been colder. And in the 1930s, of course, it got warmer, and we got into a world war. And so all of that information, I thought, geez, I need to find out more about this. So that's what I started to do, was to go into do some research, and I found Dr. Wheeler and his work, and he has a book which is called Climate, the Key to Understanding Business Cycles. And any of the books that I'm going to mention today are in my recommended book section on the website, so that you can get more information on them. But this was a key book, and I just got back about 3 months ago from New York, where I went to do some research on him at the Baruch College down there. And I found this book, which he is actually writing in. This is a picture that I actually got out of eBay, and it's one of the only pictures of him, I think, in existence. There's another terrible one on my site, but this one really shows him working on the big book. And this is 2,000 pages. And what it is a running chart, if you like, of temperature and rainfall going back to 600 BC, and it ends at about 1940, 1950, in that range. And while you have that chart of all of the ups and downs in temperature and rainfall, he put in all of the major events. And so all of the key events going back to 600 BC historically are in there, and you can see how they align with changes in temperature and rainfall. So there's the good times and the bad times, and they affect what happens on Earth, what humans do. So I went down to New York and found this big book. And by the way, he read 200 volumes of history when he was putting this together. And he had 200 people working with him, for him, working on this 2,000-page book, if you like. And here are all of the entries. So you can see any of the entries that pertain to high temperatures, warm temperatures, are in red, and the cold ones are in green. And he could see 5-year, 10-year cycles. And he came up with a number of key cycles that he followed in terms of climate cycles. And here I'm representing them here with sort of smaller cycles, which he called the 25-year cycles. And then there were 100-year cycles, And then he found 170-year cycles, 515 and 1030, which are the largest. And the top that we're in right now, I'm going to talk more about this, is a 500-year cycle. So that would be his 515-year cycle. But the interesting thing in all of these cycles is that they follow a pattern. And so you have, just like we have during our year, we have spring, summer, fall, and winter. And the spring tends to be warm and wet, summer hot and dry. Then you get into the fall and it becomes cool and wet, very changeable, of course, spring and fall, and then winter, cold and dry. Well, this pattern keeps up even at the higher 25-year, the 100-year, the 172-year, and the larger the cycle, it trumps the smaller ones. Maybe that's a bad word to use, trumps. But so you find that that the larger ones trump the smaller ones, and so you get little undulations at the 25-year over very large ones at the 100-year. So the thing to keep in mind that you have a you have a warm period in spring and summer, and you have a cold period. And at the beginning of a warm period, it's wet, and then it becomes drier. At the beginning of a cold period, it starts wet, and then it becomes drier. So right now we're at a cusp. My last blog post was about the cusp that we're at, and we're turning colder, and it is very wet right now. But there's an overlying dry. You can look at the west coast of the US, for example, it's very dry, but we really haven't started to get into the really dry weather yet, the really dry climate. That's going to come as it gets colder. So, and it's also because we've had this change. It's like we're in spring, or we're in fall rather, on a very large scale. So we're going from a very warm temperature to it's going to get colder. And so we've got this changeable weather, this extreme weather. And no, it's not because of global warming or anything. It's just because this is like, you can think of it as a huge fall on a 500-year scale. And so you're going to get hurricanes, you're going to get tornadoes in the summers, and we're going to get some earthquakes and volcanoes as well. I mean, that's what you get historically. And so he found that as he did his research all the way through. And if you look on a grand scale, you can look at what he found out with his work in terms of going back to 600 BC, only went back to, about this point just before the Roman Empire. So it was just into sort of the Greece times, just about here. So Greek Dark Ages. He really went back and did the work in terms of temperature and rainfall on this section. But if you go back to the last glacial period, I don't know if you can see this, but that's about 9,000 years BC. And so this is about a 15,000, 14,000 year span. And we came out of that glacial period, and we're already starting to see some of these cycles. And ancient Egypt was at a warm, so this is your temperature that you're seeing here. You can see 11 degrees, 12 degrees, 16 degrees, and ancient Egypt was at a high, both the Old Kingdom and the New Kingdom. And then we had ancient Greece. All of these major empires were at highs. Medieval warm period, we know it was warmer than it is today even, and the Mayan peak. And then we have what we call the modern warm period, and our climate mania, everybody going crazy about this, and we're expecting it to now drop off and go into a mini ice age. So what you tend to get in these ice ages here, or colder weather, and we're only talking a few degrees, so we're only talking maybe 5, 6 degrees max in Celsius, but it does get colder, and it also affects how people react, the mood. Now, that's not cause and effect. I would say that humans are affected by, some people believe, I believe it's electromagnetic waves from the planets. Some people are talking about light, various colors of light and that sort of thing. But I think we pretty well all agree that it goes through our pineal gland, which they used to call the third eye. And we've all done tests. We know that we are affected by electromagnetic waves, even from the Earth and the moon. And there have been studies that have shown us that. So it doesn't take a huge leap to believe that mood of the masses, I call them the herd, is affected around the world by these fluctuations, by these cycles. And so the warmth, so when you get these highs here, it tends to be warm and wet. And so these are the summers. So there's lots of food, everything is good. And when you get into the ice ages, they tend to be dry and cold. And that's what Wheeler found out. So many years later, in the 1990s, we had a number of countries get together, and they went and did a study of the Greenland ice cores. And so that's where this information, actually, the data that I got from this, and this is temperatures, comes from Stephen Pitts's books. And the key one is the unified cycle theory, and this data was in there. So I just went and grabbed it and did the research around it. So if we go back to this study here, and we'll go back to about 2000 to the ancient kingdom. I'm just going to think of it as zooming in with more accurate information. So here is our temperature, and you can see that going back minus 1200 years, this is 0, so this would have been the change between BC and AD, 1000 and 2000. So look at this, it's about every 1,000 years. And Wheeler said it was about 1030. That was his cycle change. And you can see the highs. These are the temperature highs at those periods. Well, there's also a 500 year as well. So here's the 500 year here. There wasn't a big one. There's actually 2 highs during this period. So they can fluctuate somewhat, but generally this is 1,000 years between these huge peaks. And that is affected, of course, by the sun and the planets. I hope I'm preaching to the people that the choir that believes this and don't think that it's the sun, or rather it's humans that are causing these ups and downs back here centuries and centuries and centuries ago. So if we were to overlay what I showed you, the civilizations on this period, here's where they are. So you can see that ancient Egypt was at this high, and after it hit the high, it all collapsed over time. We're talking many years, hundreds of years. And then we go into, this was actually the Dark Ages here in this period, but classical Greece started up when it started to get warmer. And then, of course, Rome took over from Greece, conquered Greece. And so the top of Rome is here, and you can see how it gradually fell apart. Rome burned down here at the bottom, and we had Hadrian's Wall, very much like Trump's wall, because the same sort of thing tends to happen. They inflate like crazy, the money, and everything starts to fall apart. And then they start to build walls and things, trade crashes, and they try and keep people out. So this is the same sort of trend, and I did a post on my website that talked about Rome and the changes. And it was interesting that right at the height of this, we got Jesus Christ. And at the height of this one here, about 600, right at the peak, we got Muhammad. So that was the Islamic religion. And so you tend to get a lot of the same types of patterns because history repeats. So we had the Viking Age here, right as we headed up. And of course, we had the medieval warm period. And there's a reason that they call Greenland, Greenland, because Greenland was not green during this period. And so this tends to be a little longer spike here at the top. So I would assume that it sort of melted up at the top here and was that way for quite some time and then got colder again. And here we are at the top of our modern warm period, which seems to be spiking into a much tighter spike because the climate has been, or the temperature has been going sideways since 1998. I have that slide coming up here. So this is the interesting thing to me, is that all of these major civilizations were all at the heights where we had good rainfall, good temperature, and we've got the same thing here with the United States. Now, these peaks down here tended to be Great Britain, Spain, and so you do have civilizations or countries coming to power at the tops of these. And then, of course, you get a changing of the guard. And you tend to find that there's a power shift every 500 years. And it tends to go from east to west and back again. And it's done that sort of all through history. Of course, there was no back here in Rome. North America didn't exist then in anybody's minds, but it was within Europe and Asia that it would shift from east to west in terms of the power of the day. So let's look at what happens. This is the same chart. Let's look at what happens when it is cold and dry. You tend to get an awful lot of pandemics. And that's the sort of thing that happens. So that's one of the things I'm going to talk about a little bit later on, is that health is going to be a real concern as it starts to get colder here and drier, colder and wet. And we've seen some things with the Zika, for example, epidemic that we've got. We also saw Ebola. These things tend to jump up at us. So you've got leprosy way back here, the most recent Black Deaths, that sort of thing, yellow fever. And so you even find on a smaller scale that if you were to go look at the Dow and the ups and downs of the Dow in the last 100 years, you would find that even as the Dow went down and it got cooler, we had things like H1N1. They all tend to jump up when it gets colder and drier. And so that is just something that happens throughout history. So it's one of the things we have to worry about. Here's the peak that I mentioned to you. So this is 1998, and this is our temperature trending. And we've been going sideways. Sideways. So this is why we get our extreme weather. And this is, I don't know if you can see this, but it's got the little CO2 line going up here, and CO2 is still getting stronger. CO2 actually lags temperature by about 400 years is what we found out. But this is our sideways temperature. Wheeler's shortest cycle is about 25 years. Now that can fluctuate from about sort of 17 to 35 in the longer periods. So this sideways action may be just about over, and I'm expecting it to get colder. The interesting thing to me as I looked at this chart was you can look at this dip here where it got very cold in 2008. Well, interestingly enough, what happened at the end of 2007, this almost looks like the Dow or any of the US indices, is they all dived and it got colder. If you look at 1929, you will find that it was very cold in the year 1929 into 1930. And of course, it was cold and dry from about late 1960s to about 1975. So there was what we call the fourth wave. In the U.S. indices, where it went down and we had a recession, very large recession. So this is where the climate, to me, is a terrific indicator of where things are going, and it's starting to turn down. And so we're going to see the U.S. markets, I believe, turn down at the same time. So here is our, here's another chart I did of the same thing. So if we take this, we can look at this. The other interesting one is his 170 years. If you remember, Wheeler came up with a 170-year top. And if these are the orange arrows, are all 172 years. Stephen Pitts, through his work, has found out that the number is actually closer to 172 years, and you get all of these peaks at 172 years where the temperature goes up and then it turns over. 2007 was the 172-year delineation. And it's interesting that if you take 2007 being the top of the market and you go back 172 years, you get to 1835, which was, of course, that was the top of the market, but it's called the Panic of 1837, which was the largest depression in the US to that point. So that had to do with railways and ended up being inflation, which turned into deflation. All of the major depressions in the 1800s, and there were a number of recessions and depressions into the early 1900s, there were 12 of them, in fact, all had deflation as a part of the downturn. So that's where we're going again. And of course, we had that in 1929. If you go back 172 years again, you get to 1663. And this was in England, where we had the largest depression to that point in England. And in 1665, 2 years later, bubonic plague. And we had the fire of London in 1666. Man-made, mind you, but these kind of catastrophes tend to happen at these periods. We also, it was well known too that the river in London I'm trying to think of the name of it right now. It's not coming to me. Of course, froze over during the winters. It was that cold. So this is just patterns in history. And whenever you get a cold and dry period, all hell breaks loose. So that was 172 years. And of course, you might go, well, what about 1929? Well, it's interesting that that was exactly 87 years ago. Times 2 is 174 years. So very close. You're getting a half time there, and you can go back and say, well, there's the market crash. And these crashes tend to happen around the world. We know about the 1929 market crash, but there were also problems in other countries at the same time, even though they weren't connected. We think of the world as being very connected now, which tends to talk about cycles on a grand scale. The other thing that's interesting, and I'm going to take you to this slide here, was that 172 years is a Uranus-Neptune conjunction, 171.4 years. And it tends to be right after that conjunction, 14 years later, the last 3 times. So if you go back to 1835 and also 1663, you will find that 14 years after the conjunction was the crash. And the same thing here in 1993, I believe, was the date, and 2007 was the top of the market. We had a crash exactly 14 years after that. So I look and say, okay, well, there's something to that. Okay, so if there are any questions to this point, that sort of sets us up to look at the markets, which I want to do next. It's really kind of an overview of cycles and how they pertain to the markets in terms of climate and temperature. And I'm going to kind of move on. If you have some questions, because I've got a lot of this to get to, then I'll take those as I go. I'm looking at the screen just to see. Okay, here's my lead-off slide to the markets. I just put in a tremendous amount of work on the visuals on this one. Anyway, we're going to get into the markets, and I want to talk about Elliott wave just to start. For those of you that know me, you know that I spend an awful lot of time analyzing with Elliott wave, and I hope you can see this. This isn't that important if you can't. But what this is showing us, going from 1790, way back at the beginning here, up until today's date, pretty well, this is actually 2013, but close enough, is that I can see the delineations, the Elliott wave cycles, if you want, or waves, all through this market. And they all work out exactly to be a 1, 2, I can find 5 waves that fit the Elliott wave rules within this first wave. I can see another 5 waves here that fit the rules, and I can see another 5 waves here. Now, this was 1929, right there, the bottom of this fourth. So this is a 1, 2, 3, 4, 5, and right here was 1974, which was the bottom of the fourth wave. And I'm going to show you this in another slide. But if you were to go through and look at all of these, you would find that all of the wars, except for the major world wars, which were tended to be at the warm periods, the height, you find that all of the wars at the low end here were all civil wars. So you always get stagflation, you get a long depression. So all of these downturns have problems in terms of the economy, and they all fit into that cycle. So here we are looking at the latest one, and of course this took off like a shot. I want to just zoom in on this period here from about 1900 to today's date and look at another slide, and this comes from my program, just to say, okay, what does this look like? So here we are, 1929. We had the top in 1929 coming down to 1930, 33 in here. You can see how, again, a bubble that we had. And it was both a housing bubble, and of course, the Fed was created in 1913, and they started in the US inflating. So there was an awful lot of inflation running up to this period. And then, of course, we got into deflation near the top and then coming down again. But it was very cold during this period. So there's a video on my site. I've got to change the name of it, which is all about the climate and the Dow over the last 100 years. And if you wanted to see that little video, I think it's about 5 or 6 minutes long. It takes you right through the Dow during that period. It's called, what is it called? Don't like the climate? Wait a cycle. I've got to change the name of that because people don't know it's about the Dow and how it reacts to climate, to temperature more specifically. But if you look at that, you'll see that the temperature fluctuates, and you can see the periods that we went through. So here is this last final wave going from 1929 at the top here, 1, 2, 3, 4, 5. And we're at the top now at about 18,300 in the Dow. And what happens in Elliott wave is that when you have a correction, you always correct back to the previous fourth at one lesser degree, which is this fourth wave here in 1974. And guess what? The Dow was at $600. I know that's a gasp. Yeah, am I kidding? No, I'm not kidding about this. We have got a drop that is going to be that dramatic in this next cycle. I think it's going to take about 5 or 6 years to get there, mind you, but we're going to have a very strong drop very quickly. Usually it will come down in 3 waves, and you can go back and look at these other waves, and you can see the sheer drops here. For example, in this one in 1840, 1840 was a railway bubble in the UK, as a matter of fact, and we had one, and that's what this reflects, because the US wasn't fully in place. We don't have records going back, but we do have them for England, for the United Kingdom. So this is what this represents, is this final wave up that we had since 1929 has 5 waves. After 5 waves, it's over. This is the big picture, and we're heading back to somewhere around 1,000 in the Dow. We get back to usually the area of, and so I would expect at least under 3,000. This is a log scale, by the way, so you can see it. If we look at this being a linear scale, we look at the period of 1929 here up until today's date, you can see the extent of the bubble. This is the largest bubble in history. There were some other ones that bankers created, and they did a pretty good job, but this one is by far the largest, 800% over 35 years. And so we're going back to this 1974 level here. I mean, this is absolutely extraordinary in terms of the size of it when you look at it on this kind of a scale. And here we are looking at today, and where are we? We're right at the top of this, and we have what I'm calling an ending diagonal, and we've got a 1, 2, 3, 4, and we have a 5th wave. I'm expecting a turn very soon and to do one more wave up, and this wave should not be longer than 6 weeks, and it depends on what happens in the next short little while as to how quickly it goes up. But it really shouldn't be longer than 6. This wave here, the 3rd wave, came up in 6 weeks. This one is got to be shorter than the 3rd wave, and so it will probably do a little throw over, but it's not going to be a very big throw over. That means it goes beyond this trend line, and then that should be the end of this market, and we're going to see this market come down very hard. So now what does that look like? So let's look at 1929. So this was the 1929 crash, and let's say we're a month away from this top here. It came down in 1, 2, 3 waves, an A, B, C, and it would have come down to the previous 4th here of 1 lesser degree. So this is a much smaller wave here, but it went up in 5 and came down in 3. So this is the A, B, C that you're looking at here. A very sheer 5 waves down in an A wave. Then it went up in 3 waves, and it will come down in 5 waves after that. So that, I want to take a quicker look at that because this looks pretty scary. Now, if you look at the numbers, it was up around 300. I don't have the number in front of me, but let's say 375, 381 or something. And it came down to about 189 here, 197. So it came down in this first wave more than 50%. So if you were to look at the market now, we should get under 10,000, if not in this first drop in the Dow. So over 18,000 now, we should get probably drop down to about 7 or 8, something like that. And in fact, if we went back and looked, I think that the last drop in 2007 got down to about 6,500. I would suggest that is probably where this is going to come down to, is that wave, where that wave turned in 2009. So that wave is going to come down that quickly. If I was to guess at how long, 6 to 8 months maybe, to get down that distance, and then we're going to have a very long bounce here, which should go up 38% at least, and then we will have a stepping down staircase here, probably in a last wave. These waves tend to come down as sheer waves. You don't tend to get, if you go back and look at where were we back here? These ones, you can look at 1929, you can look at the one from 1840. They don't fool around. They come down as very strong waves. So I would suggest to you that we're going to see something very similar in terms of this wave. Here's another look at this where it's a little more spread out. 1929. So you can actually see the waves. So you're looking at a top here in this wave, and it came down, took about 2 months to get down to the bottom here. Now we're talking about a very much larger drop from 18,000 to maybe 9,000 in the Dow, 9 or 8,000, or even 6,500. Actually, let me just go back and quickly, can I tell where that, I can't tell where that was. The numbers aren't there. So yeah, here we go. So about, let's say 6,500 on that drop. This would have been 2007, 2008. So we're probably going back to that, and then we will bounce. So if we get back to this chart here, I'm looking at 5 waves down. So we get a 1, 2, 3, 4, 5, which is the start of what we call a zigzag. And then we get 3 waves up, 1, 2, 3. We would call that an Elliot wave, a correction, an A, B, C, and then we should get 5 waves down for this last C wave, taking us all the way down to somewhere between 1,000 and 3,000. That's the drama that we're looking at. Okay, so this one, so people have said to me, well, when do I have to worry about banks and things like that? Well, if this comes down if you remember 2007, we had a pretty big drop. This is going to be a bigger drop. But it takes a while for mortgages to work their way through the system. And that is typically the thing that craters banks, is mortgages. Once you get houses that start to fail and people that can't pay their mortgages, just the sheer size of the dollar amount tends to start to weigh pretty heavily on banks. My blog today, which will probably get done by late tonight, is going to be about how money is created. And if you don't know that story, this will scare you. And it's done these days by private banks. I'm going to talk a little bit about that, but I'm not going to get into how money is created during this talk. But we're going to have incredible amounts of debt. We already do internationally, but the banks are going to be slated with debt. We will get into deflation. And so we're already starting to see it around. I'm sensitized to it, so I see it around here everywhere. And this will be the major deflationary period here, this was 5 months. Extrapolating from where we are, I see this wave as probably being more than a year. So if we're talking about this kind of 8 months, this probably a year and a bit, and then we will start down, and about a 2.5-year drop for this final wave, I think. Now, I'm guessing when I say that. There are a lot of people that are suggesting that we're going to see a bottom at around 2021, 22, somewhere in that range, which I think is fairly appropriate for the size of this thing. So that's looking ahead at what I might see here, and that's about the most I can tell you. When we get into gold, I'm going to talk a little bit about deflation and what I see for gold as well. But you can think about the bottom being sort of 2021, 22, that sort of thing. Okay, this is a point where I can get into any questions you might have about that. I'm going to talk about deflation and gold. Yeah, I'm going to be over an hour. But that's okay. If you're, I'm going to have a lot of information for you, and I hope you're appreciating a lot of this. I want to talk about some of the nitty-gritty here, and then what to do about it. So I can now. Franz says the picture's not so clear. I can't do anything about that from this end. It doesn't. Nothing's changing here. There apparently is on your browser somewhere, or somebody told me this before, that there is something that you can click on that says if you're having a problem with the picture. It really comes down to how much traffic there is on the internet. And Sunday morning shouldn't be too bad, but it can interfere, obviously. And so that is something I can't do anything about. You will also get a copy of this, and that should be fairly high quality, and you'll have that hopefully within the hour. I'll be sending you links. So let's move on into deflation and gold. This is where it starts to get interesting. So here's the US dollar, and you can look at this pretty well on a grand scale, any currency you want. But since 1930, I took this from the start of the Fed, a dollar used to be worth an entire dollar back then. And now we're looking ahead at 2016. We have lost 96% of the value of that dollar. It's now worth 4 cents to what it used to be over the years through inflation. And that has been the central banks that have done that. And governments love inflation, because while it takes the value of the dollar down, it also allows them to pay off their debts and get further into debts. It's a lot easier for them to manage very large debts. It's when it becomes deflation that the problem exists. So you can see how this went down. This is a lot of inflation here in the early teens, 19 teens. When it got to about 1920, we started to get some deflation, very small amounts of it, and then it really took off in about 1929 into the mid 1930s. You had major deflation, which means that the dollar is going up in value. So that's really the big difference that you want to keep in mind between deflation and inflation. And then it topped here, and banks started inflating. We had the war, of course, started, and then we got into major inflation. And you see another big jump here in about 1974 when Nixon delinked from gold, and that allowed us to get into fiat money. And governments love fiat money because they can inflate like crazy. And so here we are today. And that is the problem, a lot of the problem with our economy. There's a couple of things. There's the inflation, and it has taken a toll on our money, so it's not worth anything anymore. And of course, our salaries don't go up as much. So so it's a lot harder. Our standard of living just drops like crazy over this time. And of course, we don't notice it as much. And the governments try and paint inflation as a good thing. And it is a terrible thing over a long period of time. And that's the thing that is really rocking our world these days. And this is nothing new. I mean, you can go back to Rome. And I often like to talk about the Roman, the inflation of the Roman. This is the Antoninianus, I guess. But it started out in the 240s AD, and this was after the fall of Rome. And as things were getting worse, they started to inflate it like crazy, and it got down to about 40% of its original value. And then eventually it became 5%, almost worthless. It's also interesting to note that at the late stages in the Roman Empire, they started to increase the minimum wage. So the army, which had to keep them safe, of course, because they were starting to get attacked by the Huns, the army demanded more money. And so they inflated they brought up their wages, minimum wages. And of course, that was the thing that finally cratered the Roman Empire. They just couldn't afford to pay their soldiers. And so you see the same thing happening today. It's incredible how these patterns just play out again and again and again. So this inflation is nothing new. We just do it differently today. We do it digitally, and it still takes down the value of our money. Now, if you're to look at what happens, this is the man-made deflationary cycle. I have a video on my site that talks about the man-made cycle. It parallels the natural cycles, because when things are good and we have, it's warm temperatures and it is we have lots of rainfall and lots of food, we spend money and get ourselves in debt and create these bubbles, and we get bankers that take advantage of people, and it just becomes this great big cycle. And so it starts off, we have rising commodity prices here as we go up through the cycle, falling interest rates, which we've noticed. Of course, the banks do that. They push down the interest rates because the economy is not doing well. So they're trying to get people to spend more and to take out more loans, because that's how you create money. It's when you get into banking, and I do my blog tonight, you'll see that that's the way we get money into our system these days. Banks actually create money out of nothing. And they do that by creating debt and loans, and that creates money. So we have this huge economy based on debt. Then you see this easier money going into the stock market, and the stock market rises, and you see real estate prices rising. Then you get the signs of low inflation that we've had now for a couple of years, sort of 1%, and the banks are getting worried because this is starting to move into deflation. And so I see that certainly in my economy here. Locally, you get falling commodity prices. Of course, oil and gas were the first things that came down. Then we're going to start to get falling share prices. Then we'll get rising interest rates. I think they're going to have to hold off on the interest rates. I think central banks, I think this is going to be a little bit later on, but we're certainly getting into tighter money. You'll find that if you look at M3 and the velocity of money, it is very low at the moment. And so that's what the banks are worried about. They're getting into negative interest rates. They're trying this wonderful scheme about negative interest rates. Hopefully the people will not keep their money in the banks and they'll get out there and spend it. But that's not what happens, and it never happens. So we're getting into tighter money, and that's going to end up with falling real estate prices. You're going to get a credit freeze. Banks don't want to lend money anymore. And they're starting to pull in loans. Certainly locally here, I know people that have had the banks call them and pull in loans. So that's what starts to happen. And it starts getting into this deflationary spiral where the banks and everybody, business people, lose confidence and they stop spending. And then that creates, of course, less demand because people are not spending. There's less demand out there. So that ends up having layoffs in companies. Then you end up having mortgage defaults because there's not as many people working. Mortgage defaults, banks stop lending, you get cash flow problems in companies, then you get bankruptcies and we lose confidence, and it goes around and around and around. And so what happens is that money becomes worth more. But how we see that play out, of course, prices in assets and services all start to drop. So there's things, of course, that you want to do to make sure that you take advantage of that, as you need to get your footprint on the earth down really low. In other words, get your costs down, and don't buy large, highly priced assets. You want to wait because they're going to be tomorrow. They're going to be worth a lot less money, and we'll get into that in a little more detail. But this is our deflationary cycle that just goes on and on and on. And this was something I flagged, about a year ago, I think now, is you start to get Ford and people offering $10,000 incentives for their trucks, which was their leading truck. Well, that's happening all over the place. They're coming up, all these companies, car companies particularly, are coming up with very interesting ways of trying to get people to part with their money and giving them this and that and so many incentives. And what's happening here is we're seeing deflation. There's just not enough money out there in society. And when there is inflation, when there's lots of money, then of course prices go up. And people are putting it into the stock market, into homes, car prices can go up. But the reverse of that, of course, is you're starting to see prices come down now, and they're not able to sell enough of these. And if you wait a few years, they won't be able to give these things away. It's going to get that bad. So you want to wait, and in terms of spending anything, that's why I'm going to give you somewhat of a little list here coming up. But you don't want to get any large ticket items over the next while, and that relates to houses as well. So then people say, well, what about gold? So I wanted to talk a little bit about gold and silver and where I see that going. And I want to start that off by talking about the Elliot wave perspective. And this chart is a couple of places on my site. But we're going back to 2009 here. This is the previous fourth wave, which I'm going to show you. And it went way up here into almost $2,000 in the gold market. This is XGLD. This is weekly. It's a weekly chart starting at 2008 here and going all the way up to today's date. So we had this final wave up, and then we've had an A wave down, and we're in the middle of a B wave and a C wave. So if you remember what I said when I talked about the Dow, the Dow, always in a correction, and it comes down in 3 waves, reverts back to the previous 4th wave of one lesser degree. And here is that 4th wave. So eventually, I expect gold to get back to $700. Now, we've had the first wave down, that's our A wave, and then we will have a 3-waver up. So we've got an A and a B and a C. And if you, in my Traders Gold service, you know what I'm calling for and what the numbers are. And then we should get up to this top of the C wave, somewhere around 1600, a little below it. And then we should have 3 waves down in a C wave. And that should take us down to around 700. Now, we're talking, and my chart doesn't reflect this, a number of years. And what I see happening is when we have high inflation, gold goes up. When we have deflation, and it's already started to take effect, we see gold go down. So we're going to have deflation for a number of years as the market comes down, but there is probably going to be a point here at some point that they start to try and inflate and maybe hyperinflate. And that's when gold will become worthwhile to own. So there's some people that saying, well, we'll get tied back to gold, and you get the dollar actually tied back to gold. And I don't see that happening. And there's a good book I'm going to show you on that if you want to find out why in more detail. But if you get tied back, like at $35 an ounce, which is in the 1930s, to gold, there's only so much gold on earth. And so as the economy needs more money, you can't inflate, you can't create more money being tied to gold because you can't get enough of it out of the earth. So it stops us from being able to create enough money to grow an economy. Because when you grow an economy, people need more money to be able to grow it. So you don't want to create too much inflation. But the reason you don't want to be tied to gold, which we found out in the 1970s, for example, when they delinked from gold, is that they were inflated. I don't want to get into this too deeply because there's a whole story. I could spend 15, 20 minutes on this alone. But they found out that they were inflating the dollar. And so it was actually the US dollar was becoming less from the pegged value to gold, so that other countries, when we did trade with them, and we would, the US, for example, would send products over there, and people would want to get paid back, or people would buy products from the US rather. So let's say France bought a whole bunch of products from the US. They didn't want to get paid back in US dollars. They wanted to get paid back in gold because the US dollars were worth less than the gold it was pegged at. The US dollar would be worth maybe $32, but it was pegged to $35 in gold. So, I mean, what would you rather have, $35 in gold or $35 in US dollars that were actually worth $32? So everybody wanted to get paid back in gold. And so gold started leaving the US, which was a problem. And therefore Nixon decided, well, we need to unpeg the dollar from gold. And that's what they did, and created fiat money. And of course, inflation just took off. So we've got a period of deflation. I see gold heading down, but you certainly want to have some in your portfolio, and you want to have gold coins or silver coins. Think of these precious metals as metals that will be very handy to be able to, call it trade if you want, but to buy things in the downturn. Certainly when things start to inflate, if they hyperinflate the dollar, which they will probably do, they'll end up printing. And there's an interesting thing that may happen with going from private banking to public banking, which I want to talk a little bit about as well. But I see a long period of deflation and maybe some hyperinflation at the end, but don't expect gold to go up in the meantime. It is going to go up a little bit to 1600 and then back down again is what I see happening. And that's Elliot wave telling me that. So moving on into some of the things that tells us then, in deflation, cash is king. You want to be in cash as much as you can. Investments become worth a lot less. I'll get into that a little more specifically here coming up. You want to get out of debt because money becomes worth more. So what happens, and the reason that governments like inflation is money is losing its value. So for any debt, you're actually paying back the debt in money that is worth less. if you can get that. Sometimes people have a hard concept with this, but you're paying it back into tomorrow's money, which there will be more of because they're inflating it, but the money also becomes worth less. So you're paying it back in dollars that have less value. So it makes it easier for governments to pay off their debts, and for people as well. But when you get into deflation, if you get stuck with a lot of debt, there's less money around because people are not getting paid as much. People are losing money. And money is becoming more valuable because there's less of it around. It's like any other commodity. If there's less, it becomes more valuable. So it is going to be a lot tougher to pay back your debt if you are in debt. So you want to get out of debt. And we're going to see credit dry up. We're probably, I would think, we're going to see the end of credit cards in a few years. They will just stop being used. Here's the big one in terms of your homes. In 1929, homes dropped through the floor. We also saw that happen in 2008 rather. We should see homes drop 80% or more. So one of the things that you can do is if you're in that particular situation, you could sell your home at the top of the market. In Toronto and Vancouver in Canada, where I live, we have had one of the largest bubbles in history in terms of real estate, and they're just starting to crack. It's interesting that when we get right to the top, the government starts to put in more regulations, and they cause it, even though we know it's going to topple, they cause it to topple more rapidly through some of the regulations they put in place. So we're seeing that already. I've seen Toronto and Vancouver stop going up. Vancouver more particularly, but they've just put in a lot of regulations in Toronto. So here is just a little. This was the top of a chart in an article in the most overvalued housing in the world, and that was in Toronto and Vancouver, just to prove that point. So the 18-and-a-half-year real estate cycle comes from Edward Dewey. There are other people that came up with that as well, but I've taken his chart and just taken data. This goes back to 1795, where he looked at the real estate numbers, and every 18-and-a-half years, it goes to a high and then comes back down again. So this is sort of a linear look at this, the ups and downs, but of course these may be ups and downs in a rising market over a long period of time. This is just showing you the cycles. 2007, I have as a top here is what happened, and then it's come down and it's gone back up again, but I'm looking for a low somewhere around 2018. In Canada, it's interesting that the last low we had was in the year 2000, and just the year before that, they started actually taking the data. So it suggests to me that 2018, 2019, something like that is going to be the low for the real estate market in Canada. I would think we'll have another low in the US, the same, and this should be a worldwide phenomenon, but it follows this 18-and-a-half-year real estate cycle. And here's Edward Dewey's book. This is a good one, Science of Prediction. And actually, my site has that on the front of it, The Science of Prediction. Great book. If you have not read any of Dewey's book, this is a great one, very easy read, but it takes you through a lot of the major cycles that he found. Okay, I'm not going to spend a lot of time on this. Then we get into holding off on major purchases. That goes through cars and all the other things. Investments, you want to get out of most investments. I often say investments are dead. So if we were look at them, in terms of the red ones, I would say that the ones you definitely want to be out of are stocks, real estate. Real estate, I mean, this is the old all boats drop at the same level, or when the tide goes out, all boats drop. So real estate, I mean, if you're living in a home, everybody's just going to go down at the same time. But if you were in a place where you were renting, for example, if you had 4 or 5 homes, it might be a good idea to cash out some of them now. I have friends who have actually sold their homes and have decided that they're going to rent for a few years and then buy their homes back. This is called shorting the real estate market, buying their homes back at 20% of their original value or even lower than that. There are going to be some great finds at the bottom of this market. You'll be going to banks and getting these things for a song. So stocks, real estate, bonds, you'll get governments. There's nothing really safe out there because you're going to get government defaults. You're going to get corporate defaults. big time. So I would stay away from all of these. Mutual funds, particularly, are a terrible place to have your money. And commodities, of course, never do well during a depression. So those are the ones I would flag as really red. If you're speculating, if you know what you're doing, you can make an awful lot of money by shorting the market, of course, in futures, stocks, currencies. Currencies tend to be a little more volatile, or they certainly have been, and I'm seeing that they're probably going to be, because people or countries want to deflate as much as possible, and we may be seeing the end of the euro in the next couple of years. So there's going to be interesting times in currencies, but you really need to know what you're doing, and they all follow Elliott wave. I've never seen Elliott wave fail, so that gives us a good idea as to where things are going. Money market funds are relatively safe, but you have to realize that everything craters, and really this is going to be a bloodbath in terms of money. So you need to make sure you know in terms of money market funds, if it's with a bank, where the funds are and how safe that bank is, because if they go bankrupt, everything goes. Treasuries is a good place. These get into the greener ones. So if your government treasuries, you won't be making a lot of money on it, but it's a good safe place to keep your money. Cash and in precious metals, which will either go down a little bit, but they never lose all of their value, and it's a good protection against hyperinflation. If it goes up, if the dollar starts to lose its value because it's been hyperinflated, then you'll have your precious metals will go up. Will go up in value. Now, I've got a question here. Gold in euro. I don't know what that means, so maybe you could expand on that, unless I've already answered your question. That's Maz. I'm seeing that there. Okay, so that is my look ahead in a general sense. One of the safest places to have your money. I already hear this is happening in Europe. People are putting it under their mattresses and getting out in cash. If you can find a good safe deposit box in a safe bank or other institution, that is a great place to keep your valuables. But otherwise, it is a time to know where your money is, know the values of things, and start to get organized in terms of the future, which is going to be very cash dependent. And there's not going to be an awful lot of places and investments to make money. It's all going to come falling back down again. Our monetary system. I've got a few slides here on this. I'm starting to get a little late, but I'm going to go through this. I think it's important to understand what's happening here, because there could be one thing that changes the environment going forward. We have got debt internationally now at a level that is absolutely incredible, never been seen before on Earth. And we've got all of these countries, and I don't know how well you can read this, but the key point is that all of these major countries, and certainly the G7 countries, are all bankrupt. And there is a sustainability level of about 60–65% of GDP that people say is safe, and you can pay back the money that you owe. But beyond that, which is all of these red countries here, Japan is an interesting one, because they have their own central public bank. And so they're a little bit different in that they print their own money. But all of these other countries are pretty well, I haven't picked through the list yet. Most of them have a problem in that this is debt that is owed to central bankers, private bankers. And that has happened over the last, well, if you go back to the Fed started in 1913. That's a series of 12 private banks. So what is happening is, or what has been happening, is that one by one, all of these G7 countries and other countries are succumbing to this idea that the central banking system, this cartel, which is around the Bank of International Settlements, this European banking cartel, who, let's put in quotes, prints money and then loans it to all of these governments. All these governments got sold the idea that this was a safer way to go. And I'm going to use Canada as an example. We printed our own money. We have something called the Bank of Canada in Canada, and we created that in 1938, of course, in the Depression. And that was a central bank, and we printed our own money, and that paid for World War II. It paid for our railway system, our road system, our health system, virtually everything. And by 1974, we owed about $21 billion. That was all that we had, and that was owed to ourselves. But what happened is Pierre Elliot Trudeau, we have his younger son now, who is the prime minister. Don't get me started on that. And he got sucked into this idea that these central banks, this is the Bank of International Settlements, nice office, would print the money rather than Canada, and it would keep the world a lot more stable. Well, if you understand how money is created, it's really just a double entry system. A bank creates a loan, and then they create another entry, which is the money in your account, and that is how they create money. And the banks, these international private banks, do it the same way, but the difference is that they press a button and create this money and then loan it back to the government of Canada, or in the same way the Fed with the US, they loan it back at compounded interest. So you'll find that the $20 trillion that the US owns or owes to these central bankers, the Fed in this particular case, is about 80% interest. And if there wasn't the central bankers sucking this money out of the economy, everything would be just fine. So if you were to look at this is the national debt in Canada, you can see how our debt just started to climb in 1974, which is when Pierre Trudeau decided to go with these central banks. And 80% of our debt, which is something like $816 billion, is now 80% of it is owed in interest alone to these central bankers. So, and in fact, if we hadn't done that, somebody has done the math and said that we would probably be to the positive about $13 billion and have no interest whatsoever. So there is a dilemma with these guys over here, the Bank of for International Settlements. This is actually in Switzerland, but I think them as the European banking cartel. They have done this with countries all over the world. And it's just like the money lenders. Every time we have one of these cycles, the money lenders tend to take control, and there is no reason to have them. All of these countries can create their own money, and there would be no interest. Now, Canada might go back to creating its own money again, and they might charge interest to people that borrow it, but that interest goes back into the treasury. And so you get enough interest into the treasury, and it starts to pay for the government, and it pays for taxes. And so you don't need the taxes. And the other difference in having a public bank is that a public bank is backed by the people of that particular country and the taxes that they pay. The private banks, of course, it's just private bankers. And if they decide they're not going to back something, then they're not going to back it, and they want to get paid back their interest. So there's a real difference, and we're in a world now of private banking, and the interest, the compounding interest, is the problem with the world today. So if the US decides the way they're going to get out of their $20 billion problem is to spin off or nationalize the Federal Reserve, then they just started creating their own dollars, and they would pay back that debt in US dollars that they would create themselves. It means that the population then has to pay it back in taxes. So it's a long-term problem. But it has to come from somewhere, because otherwise you end up with hyperinflation. So there's an interesting thing that's going to happen there, and there's actually a lawsuit in Canada going to the Supreme Court, or it's winding its way there to force the government to go back to using our central bank and to get away from these central bankers. I see this as a worldwide movement, and what's happening with Brexit, although people may not realize that, it's one of the first steps in the people taking control of their money again. And so I see this as being what's going to be happening worldwide, and something to watch, and the problem that we've got generally with life on this planet, because money belongs to the people. It should be, and I've read lots of books on the beginnings of money and how it all came. It is a currency for exchanging things. And once you get it into the hands of bankers, and you get bankers that then take control outside of a country, the sovereignty of the country is gone. The bankers basically own it, and they start dictating policy, which is what's happening with the US. So this election in the US is all about the fight between central bankers and the public. and people want to be able to take back their money. And so this is the thing that you're seeing between the Clinton camp, which tends to be the elite and linked to the banks and Wall Street, and Donald Trump, who is, of course, the other side and fighting for the people. And so that's the underlying issue that is unraveling or unrolling here. So here's our G7 nations, Japan being the odd one out because they have their own central bank. And we have $38 trillion in debt in US dollars between all of them. The other central bank, of course, is the Federal Reserve, these ones, the Bank of International Settlements, of course, is tied back to the Rothschild families, and they're the richest family on earth. And the Federal, we haven't really found out that they are tied back to the Rothschilds. They might be, but the link is a little tougher to find. But this is a private bank, and it's 12 banks in the U.S. I'm going to kind of slide over this slide. It would be really interesting to do another little video, which I think I'm going to do, explaining how the Federal Reserve came into being in 1913, started to inflate things, and of course created the crash in 1929 because people were inflating, and you get to a certain point and money goes into the market and it blows up again. And then we got into Bretton Woods. Bretton Woods was after the war, when the U.S. got tied to gold, and then they found their problem, which I mentioned, the Nixon shock. He got unpegged from gold, and then we got into fiat money, and we have our expansionists here, which have inflated like crazy in the last 35 years and created our incredible bubble. And it goes on with Janet Yellen, and it is going to be over, I think, in about a month, and we're going to start to come down. So I've talked a little bit about the issue between public and private banks. We actually have a public bank in my province here in Alberta, and that is where my money is going. And there is one in the US called the Bank of North Dakota. There are other public banks in the world. India's got one. Germany actually has one, as well as a lot of private banking. And I think Korea is another one. So there are a number of countries on earth that have public banks. And Japan, of course, has not let the money lenders from Europe into their country, and they're creating their own money. So there are countries that have fought this, but there aren't that many around. So if you are interested in following up on this, there's a wonderful book called The Web of Debt, a very easy read by Ellen Hodgson, and you can find that in my list of great books on my site, recommended books. And you can link to that in Amazon. I highly recommend this. There's another one which is called, that she wrote as well, called The Public Banking Solution. And that's another great book that'll tell you all about the financial world and what's really going on. Okay, I'm moving through a lot of information fairly quickly. Are we all okay out there? I'm kind of coming back to breathe every once in a while. If you have any questions, Maz, I didn't understand whether you had more on that gold and euro, but if there's anything else that I can touch on, I've got one more section to go, which is really kind of finishing up on some of the things that you want to pay attention to going forward here in terms of things that you can do and how tough it might get out there. Just general things. Everybody okay? Just kind of let me know that you're sort of still with me, and if you've got any questions, I may have put too much information in this. If a lot of it is new, that might be a lot of information to take in, because I am going through a lot very, very quickly. My last little section here is just explaining what I see happening in terms of Wheeler and some of the things that he said, some of the traits and ways or things that you need to think about in terms of staying safe, in terms of your money and some of the other things you need to prepare for. So I will look for any questions. Good. Oh, there's Robert. Hey, Robert, how are you? Great info. That's good. Great info. So I got some more. This gets into the solution a little bit in terms of what you can do to sort of prepare for this. So what Wheeler found out, every 500 years, and in fact, every 172 years, as it turns colder, these are some of the things that he saw that happen once you get into a cold, starting to be a cold climate. You get civil wars. You don't get international world wars. And so civil wars within countries and skirmishes between countries. You get a huge revolution, usually the people taking over from the elite, and you get into this 99% and 1%, like the French Revolution, for example. It's the same story over and over again, only this time it's an awful lot worse. You get migration all the time. You found this at the top of the Roman Empire. As it's turned colder, there was a period of quite a number of years, 10 to 20 years, where we had huge migration. You get riots. You're seeing that in the US. My goodness, you've seen that in countries all over the world where people are rising up, and they're rising up. Primarily, it is a financial problem because people are getting beaten down, and you get money going up to the elite, and it has to do with this banking problem and the compounding interest. And so this just goes on and on and on and gets worse and worse and worse, to the point that people just won't take it anymore. Class struggles, of course, is part of that. Pandemics, once we get into the colder climate, you're going to see this much more. So we need to stay healthy, and we need to make sure that we are working out and getting enough exercise, because there's two things that happened. Of course, you get into a depression, and society mentally gets into a depression. So one of the ways to keep your mind in a positive light is to get lots of exercise and drink lots of water and just be around people that are positive like you and understand what's going on. This will go on for some time, but if you handle it properly, are you going to be a victim, or are you going to beat this thing? Because if you handle your money correctly and you are in good spirits, you can stay very safe during this entire period and be helping other people get through it, which it can be highly rewarding. Or you can move out into the country and do your own thing. I mean, it depends on where you're at in terms of what you want to do. Authoritarianism is very big at the top of these cycles. You were finding that all over the place. My goodness, you can hardly get in and out of the US these days. And you see that with all the riots and happenings. And of course, we've got, everybody is a number and a picture these days. So I just got this week my Nexus card, which gives me entry into the US back and forth without going through all the lines. And so I've been fingerprinted, and they have checked my eyes in terms of, I'm not sure what they call that, but that's the eye recognition, and taken all my information. And so I am certainly out there in terms of the US government, and I live in Canada. So, you can see the authoritarianism all over the place, and it is becoming tougher. There's very little freedom these days. That will change, because the light at the end of the tunnel as we go through this is democracy always takes another step up, and freedom, we become much more free at the end of one of these revolutions. So that's the other side of the cycle. The other thing is we have weak leaders. That is something he found at the tops of these cycles. Well, you can see that in Clinton and Trump. I can see it in our country. My province has got a very weak leader, for example, and we have a 40-year-old kid who's running the country who really has had no experience whatsoever. And you can see that, other countries around the world with these weak leaders. You can also see that we're moving towards socialism, which is also something that he found out. And you can look at a lot of countries in the world in terms of the leadership that is changing. I think we're going to see leadership change very shortly in Germany. There's also a lower birth rate. And that's something that always happens towards the high of the warm climate, and it stays low all during the cold climate. It will not really pick up again until the bottom of the cycle when we turn warm again in terms of the birth rate. So that is going to start to come down even more. So if we look at, this is something on my website, all of the areas in which we are affected. I've talked about climate, talked about the markets coming down, and this is a major cycle turn. The economy, of course, we're going to go into deflation, and it'll be not cycling deflation, but spiraling deflation as it just gets, and this will go on for a number of years, where things will get less expensive and our money becomes more valuable. Politics and authority, we're going to get into weak leaders. We're going to have probably lots of changes, lots of coups. We're having one in Venezuela right now, as a matter of fact. And so we're going to get more into gradually lesser authority, and things will start to certainly come apart in the U.S., which I've said. My father used to tell me that in the 1970s, because he was born in 1910, and he lived through the Depression, and he looked at how the U.S. was doing and how they were inflating and getting more in debt. And he used to tell me in the 1970s that they can't keep living beyond their means; it's all going to crash again. And that was. And I've just always remembered him telling me that, and here we are again. Our health is, so we're going to move more towards socialism. There are also, I hate to say it, but we're probably going to see other leaders like the Hitlers of the world are going to pop up their ugly heads during this period over the next 100 years or so. So we'll see what happens there, but it's that kind of a leader. We're going to have these countries falling into huge debt problems and people not getting fed. And of course, these types of political leaders take over and become much more authoritarian and totalitarianism kind of regimes. Health, of course, is going to be an issue. So you want to sort of stock up on anything you can and need that way if you have health challenges. And the social psych, one of the things that I say I'm going to touch on here coming up is you need to stay in touch with your community, because we're going to need other people around us, and you're going to need people that are positive, but you need to also take stock of your skills that you have for your community, because people are going to be relying on people who have those kinds of skills, whether it be woodwork or whatever it is that or big one is going to be gardening, because people are going to be building or creating their own gardens and learning how to grow vegetables. People are going to be, of course, harboring chickens again and creating their own eggs. And so you're going to see an awful lot of this around the world as we get further and further into this because of the despair that's going to be around. So these are some of the things down here, of course, at the bottom that get influenced by these major forces here. So if we're going to move on and in talking about staying safe, and I'm getting close to wrapping this up here, here's some of the things that I think you should think about. I certainly do, is where you live, urban versus rural. When things break down and people don't have money to live on, there's an awful lot of people that are not going to be able to take care of themselves, and they tend to be the poorest. But when people get really hungry, they're going to do just about anything they can to eat. And if you're living in a major city, like I'm going to go back to New York in November, and I was just back there a few months ago, and I can just imagine what it's going to be like, because we're going to get transportation systems that are going to break down. It's going to be difficult to get food into some of those areas to feed that kind of population. And a lot of younger folks there have no idea where food comes from. I mean, they just, and where are you going to create gardens? So there are going to be some very tough times in cities. And I would say that living in a condo in a city is not going to be a good place to be. And so you'll find also that when we get into colder weather, you find that there's a big move from urban to rural. So there's going to be a huge migration over the next while into rural areas, because that is where the farming community is, and that's where food is. So where you live is really important. And also for another area, if you're another reason, if you're living on a coastline that is hurricane prone, that's a problem. If you're in other low-lying areas near water, that can also be an issue. If you're near volcanoes, so you really need to take stock of where you live and think whether you need to move somewhere. There's an awful lot of people that are setting up places in the country. And if you're going to move to the country, you want to be somewhere where you can actually grow things and maybe have some livestock. Those are things that are going to be important in the future. Food and water, I can walk to water, and I'm very lucky that way, that if I needed to, I could walk to the river, which is in Calgary, a river that comes from the mountains. It's all fresh water. In Canada, we're very lucky to have our own water. I hear what's happening in the US right now with people that are losing their wells, and it's just going to get an awful lot worse as things get drier. So that is going to be the major issue, because you cannot live without water. Food is another issue. I'm going to give you a slide here. I'll just go to it right now. One of the things I say to people, if you want to stock up on food, one of the best ways to do it is freeze dried. And my favorite one is Mountain House. And you want to get number 10 cans. You can go looking for Mountain House. Google that if you're interested in this sort of thing. But this kind of food lasts for 25 years. And so if you, for any kind of emergency, either short term or long term, having 3 months or a year's worth of food, I'm going to stock up on a year's worth. This is actually a year's worth here, probably for one person at about $1,700. That would be US dollars. But I mean, you can put these number 10 cans last for 25 years. And so it's something that if all hell breaks loose for a couple of $1,000s, you know you're going to be okay for a year. And it wouldn't probably be a year total. You probably just periods of a month or two when you can't get the kind of food that you'd like. So you need to sort of think about that aspect of your life moving forward, or stock up on, get into prep. While I'm on this topic, here's a great book that you can also find in my recommended book called The Prepper's Blueprint. The cool thing about this is it breaks it down into 3 different areas: short-term emergencies, medium-term, and longer-term. And so it's got all kinds of lists and lists and lists of things that you can think about. And some of them may not pertain to you, but it's a good thing to keep having this book around, and being prepared for downturns of any nature is always a good idea. It's well written, it's got a ton of information, and you can get this from Amazon as well. So back to my list. Farming, gardening is going to become a lot more important. Communication, I can see internet going down. I can see I've got actually 2 companies that provide my internet, so I have a backup for my trading and for what I do with all of you folks. I've got 2 of them, so if one fails, hopefully they're not both going to fail at the same time. I always have a landline, so I find that the worst case, I've got a landline rather than being all cell, because there can be problems with cells as well, as we know. So communication is going to be an issue. Money, gold, silver, cash. I've talked a lot about this. Public banks, if you can get your money in a public bank, if you're going to stay with the banking system, that's the best way to go. Because again, in 2008, the public banks, I mean, you go look at the Bank of North Dakota, had no problem during that period, where there were a lot of banks that went under. Government services, don't count on them, particularly Social Security. There's going to be problems there. So you need to not rely on the government handout. It just is not going to be there very much longer, unless they decide to go to a public bank and then can print their own money. And that is the big paradigm shift that governments are going to have to take. And that's one of the things that I don't know if that's going to happen sooner or later, but it certainly started to happen during the 1930s. So once we get into this, I can just see that happening, but it's going to be a pretty big shift. Energy, if you should have some sort of energy source in terms of generators, you can have these ones that are built in. For example, I think there's this one's, you need about 9,000 watts, 7,000 to 9,000 watts for a reasonably decent sized house, but you can do some research on that. This is 11,000 watts. This is a built-in. I think it runs on natural gas. That's another thing, is we're probably going to have, depending on where you live as well, we're in a province that is a commodity province. We have lots of natural gas and oil around, so we're close to that energy. Depending on where you live, that is another issue that you may have, and that may affect the energy. So it's important to understand where you live. This is, I think this is $3,500. This is about $1,200, I think, for this one. 9,000, just a little portable generator, but that gives you an idea of pricing for those things. It's good to have those around. I think this runs on gasoline, or yeah, I think, or that's oil I'm seeing there, but there are a number of them out there. So energy is an issue. uh, and depending on whether you live in a warm climate or a cold climate as well, energy comes into play. Community, family is really important. If you are not getting along with your family, maybe it's a good time to make up, and because you're going to rely on other people during this period. And personal safety and emergency prep. Emergency prep I've somewhat talked about. We don't have a lot of guns around in our country, and I know that England is very much the same way. In the US, I think that gun safety is going to be a big problem. Again, it comes to when people get desperate, they will go after whatever they can get their hands on. And I mean, if it's life or death, you haven't seen anything yet. And so that is my concern in terms of safety. Be aware that this is a time that we have never seen. Nobody has seen before, even the 1930s. Nobody's been alive that long. So we're now into an era that is going to be unlike anything that we've seen. And so that takes me to my preppy book and down to the bottom here. And that pretty well kind of finishes it up for me in terms of my presentation. I know there was a lot of information there. I'm going to just look at a couple of questions here. Grains and oilseeds. No, when I was talking about commodities, I was tending to think of commodities like the metals, copper. But grains and oilseeds, because demand goes down and a lot of these things can't get to market, I would have to research this. But for example, you would think that farmers do very well. During the Depression, they didn't do well at all because they couldn't get the money. There wasn't the money there. And a lot of people would plow over their crops and things because they couldn't get paid for them. They couldn't get to market, and markets break down. And so there just becomes this issue of transportation. We're already starting to see international transportation breakdown. Shipping companies are going out of business. So it is, again, this problem of all comes back to money and currency and having enough of it in the system. And right now we're going into the velocity of money. Money is diving. So there isn't the money there in the system. And it goes back to why? It's because these bankers, these banksters, as I call them, are sucking $20 trillion out of the US economy, for example. And most of that is interest. So that is money that is coming out of the economy. And that is the reason the taxes have to go up. So that's sucking the lifeblood out of an economy. That's just one example, but this is happening around the world. So you see the bottom in 2018 along with the real estate decline. I see the real estate decline. Well, commodities are the first thing to go down. So they're going to stay down for a very long time. Real estate's going to stay down for a very long time. Oil, I think, is going to be probably under $15 and will stay there for a long, long time. So I'm not going to see it go up anywhere spectacularly in my lifetime. In fact, if you were to look at the US market, go back to my charts here. 1929, I can't draw a line here, but I would say, I have 1929 here somewhere. Okay, so to get above 19, the high at 1929 took us into about 1960, 55. So that was 1929, 30, 25 years it took to get back there. So that's the kind of thing, probably a lot longer to get up to where we are now. It's going to be a big drop, and it's going to be down for a long time. Although it did start to come back quite quickly. I think this is going to probably have a longer period of time. I mean, this came down in what, a couple of years, 2.5 years, 3 years. It's probably going to take us a good 5 to 6 to 7 maybe to get right down to the bottom, and we'll probably sit there for a while and then start to head up again. So we're just talking about just a much larger drop over a longer period of time. And I would think the recovery, just because this drop is so extraordinary, is going to take longer. I'm guessing, I'm just going by historically what has happened. I mean, it just doesn't bounce back. Okay, are there any other questions? That was from Michelle. Thank you, Michelle. I hope that answers your question. If not, let me know. If there's any other questions. I will handle them now. Otherwise, I know I'm into an hour and a half. So, but we got through pretty well everything I wanted to get through, which is good. And that gives you kind of an overview on where I certainly see things going. And I don't have all the answers because, again, I'm going from my reading, and I've read a lot of books. There's still an awful lot of unknowns because history rhymes. It never quite repeats. So there's always something different in it. But I think we're going to have a pretty tough time coming up. But if you get into cash and you have the backstops, like you've got some food and you've got some cash and you've got some gold or silver, you should do just fine. And it's a case of, helping the people around you. And there's going to be people that have not got ready for this. I'm a sailor, and so whenever you're in tough weather, you always prep for the tough weather. And you maybe don't go out if it's that bad, but if it's not that bad, you still prep and tie everything down and make sure that people on board know that if anything happens to their captain, that they are going to be able to turn on the motor or the engine and get the sails down and be able to get back into port. So it's just that kind of prep on a much larger scale that we're talking about here. So I'm not seeing a whole bunch of questions, and that's, I guess, good. Yep. Okay. Well, if there are no more questions, because I've been talking and talking and talking, then we will shut this thing down. You'll get a copy, or should get a copy, in your inbox in the next hour and a half at the latest. And so I'm not putting any deadline on that. You can have that. You can share it. You can do whatever you like with it. It's up to you. And I'm probably going to do another one of these at some time. I just thought I would prep this one and see for free how long it took me to get through it. And of course, things are changing. If I'm right, we're going to see the top of this market sometime within the next month to 6 weeks. And so, so things are going to change pretty dramatically. George is asking, how do you know what's a public bank? The public banking, that's a good question. The public bank, I'm going to make a list of the major ones around the world. And I have to go through this book because they're all sort of listed there in this public banking solution book. And a lot of the public banks some of them are not available to the public, but there are some that are. I know that India's got a major public bank that people can bank with. We have credit unions, by and large, are not, but some of them are. You just have to inquire at the bank and find out who they're backed. So public banks are backed by the government. That's who they're backed by. And that means that any interest that they charge goes back to the government. So we have a public bank in Alberta called Alberta Treasuries. And Alberta Treasuries is just like a normal bank, but they don't call it a bank because there's a law in Canada that says if you're a bank, you get treated differently. But this is owned by the government. It is supported by the government. And one of the key things that's going on in Canada is there's this bail-in legislation that's in the legislature right now that they're trying to get in this fall. And they have highlighted we have 6 main banks, like the Bank of Nova Scotia. We've got the Royal Bank of Canada. Those 6 banks fall under this bail-in, which says that if the banks go bankrupt, they're not going back to the taxpayers. They're going back to the shareholders. And it's not very specific as to whether depositors are going to be part of that. But we know that I'm not going to have the name of it here, but we know that the Federal Insurance Deposit Group, which is supposed to secure in the US, it's up to $250,000 in a bank account. In Canada, it's $100,000. They simply do not have the insurance money. So we know that if banks collapse, there isn't going to be any more money there. So the money has to come from somewhere. And so they'll go back to shareholders. Well, if they don't get it out of shareholders, they've got depositors sitting there, and that money may be fair game. And it's certainly what happened in places like Cyprus. I mean, that was the first place it happened. So it's really important that you pay attention to what's happening in the banking community, because once some of this stuff starts to come out, they won't let on. So you just have to be very careful and be very cognizant of the fact that banks will fail, and you have to be careful to get your money out or get enough of it out so that you've got a safety net, because that's the thing that concerns me the most. And I think it's going to take about 6 months to a year at least before that starts to become a problem after the market tops. Okay, I hope that answers your question, George, as much as I can, but I am going to, and I will make a commitment. I'm actually going to write in a blog on how money is created, and I've got to go back into that book today. So I will try and get at least a partial list up in the forum, and I will leave a comment in the free blog to that effect. So if you're on the site, then you would be able to get that list. Okay, folks, thank you very much for being here. You will all get free copies, and I know that we had a whole bunch of people that didn't show up, but then it's Sunday morning. Sunday morning where I am, or Sunday day, and it tends to not be the thing on most people's minds. So, and they may have got the reminders at their business or whatever. Anyway, thank you all for being here. Best of luck. This is going to be tough times, but if you prepare for it carefully, you're going to be just fine. And that's the message that I like to take to people. And in fact, if you're speculating in the market and know what you're doing and are shorting it, this is an opportunity to create wealth that is life-changing. And that's what I'm preparing to help people do on my site. Thank you very much for attending, and we'll shut her down, and that will be, and you'll see this in your inbox within about an hour and a half.